Welcome back to the Market Podcast. Asymmetric info for individual investors. Educational info only, not financial or legal advice. Consult a pro before investing.
Okay, let's unpack this. Today, we're diving headfirst into advanced micro devices, or AMD.
AMD, yeah. A name lots of people know.
For many, this name immediately conjures images of powerful gaming PCs or maybe the beating heart of a high-performance server.
Sure, the Ryzen and EPYC lines are big.
But for individual investors, I think the question that truly resonates is whether AMD is genuinely the dark horse in this explosive AI race.
Can they really challenge the titans?
Yeah.
Specifically, Nvidia.
Exactly. Our mission in this deep dive is to extract the critical nuggets of knowledge from a pretty comprehensive business breakdown.
Give you that shortcut, yeah. Get you really well informed.
We're going beyond the headlines, peeling back the layers to understand their strategy, their cutting-edge technology, and crucially, their sustainable competitive edge.
So what does this all mean for your portfolio and really your understanding of where AI is heading?
Let's begin at the very top, with AMD's leadership. It's often said that a company's success is inextricably tied to who's at the helm.
Oh, absolutely. And in AMD's case, their incredible resurgence is undeniably a cornerstone of their story, driven by an exceptional team.
At the forefront is Dr. Lisa Su. She's been chair and CEO since October 2014. Her name isn't just frequently celebrated in tech circles.
It's practically legendary now, and for good reason.
What I find particularly fascinating here is her deep, almost surgical technical background, a PhD in electrical engineering from MIT.
Right, not just a business degree, a rigorous foundation in the actual science.
Her career isn't merely defined by her transformative tenure at AMD. It spans giants like Texas Instruments, IBM, Freescale Semiconductor.
Giving her this unparalleled grounding not just in semiconductor tech, but in shrewd, large-scale business strategy. Indeed. Dr. Su, while not a founder of AMD, has truly orchestrated a transformation that mirrors the profound impact you sometimes see with founder-led firms.
Her strategic pivots have been, revolutionary, haven't they?
Absolutely. Think about the crucial decision to lean heavily into the chiplet design.
Right, that was a big bet.
A huge bet. It wasn't just a technical gamble. It was a strategic masterstroke when many others clung to monolithic chips.
And it fundamentally altered their path.
Completely. It let them innovate faster, scale more cost-effectively, customize solutions, ways their rivals struggle to match.
And the market cap reflects that shift. From under $3 billion in 2014...
over $180 billion by 2025. Just astonishing growth.
And her proactive decision to accelerate MI350 production in 2025, that's not just a product announcement, is it?
No, it's a direct, agile response to immediate customer demand and a sharp, strategic, competitive move. Shows incredible foresight.
That kind of vision explains accolades like Time's 2024 CEO of the Year, the I.E. Robert N. Noyce Medal.
Industry-shaping impact, an undisputed force.
But Dr. Su is certainly not alone in this. She's built a formidable team around her, a sort of war council. Who are the other pivotal players shaping AMD's future?
Well, you have the technical brains, Mark Papermaster, Executive VP and CTO.
Right, orchestrating the entire tech roadmap.
With 40 years of experience, IBM, Apple, Cisco, he's been around.
He spearheaded the development of the Zen CPU family and the Infinity architecture, didn't he?
He did. And for anyone listening, Zen wasn't just a refresh. It was a fundamental overhaul. Made them competitive again, performance per watt, multi-core.
An Infinity architecture, that's the internal highway for data.
Exactly. Crucial for AI, high-performance computing. Anything needing massive data movement, both foundational pieces for AI scalability.
His election to the National Academy of Engineers in 2025 really underlines his contributions.
It absolutely does. Significant recognition.
Then there's the financial strategist, Jean Hu, EVP, CFO, and treasurer.
Meticulously managing the financial strategy, which is vital.
Especially with those heavy R&D investments needed in this industry.
Precisely. Her 2 decades in semiconductors, previous CFO roles at Marvell, QLogic. That ensures rock-solid fiscal discipline.
And she serves on Fortinet's board, too. Brings cybersecurity insights.
Right. She has a breadth of expertise across the tech landscape.
And driving the crucial AI and server businesses. Forrest Norrod.
EVP and GM of Data Center Solutions. A key role.
30 years of experience from Dell, Cyrix. He's responsible for that EPYC processor market share growth.
Directly responsible. And he oversees the Instinct Accelerators, too, the heart of their AI ambitions.
Finally, the AI innovator, Vamsi Bopanna.
Senior VP of Artificial Intelligence, leading the specific AI strategy.
He came over with the Z-Links acquisition, right?
Yes, a really important acquisition. His expertise in adaptive computing and AI product development positions him perfectly to advance that critical instinct series. When you connect these individuals, you really see a synergistic leadership team. It clicks.
How so?
Well, Sue's overarching vision guides the AI focus. Papermaster's technical prowess underpins the product innovation, turning vision into silicon.
And Norad and Bapana are executing on the ground.
Exactly, driving data center growth, AI product execution with real precision. This structure lets them be incredibly agile, responsive to market demands, a well-oiled machine.
Now, for you as an individual investor, this is incredibly important. How are these leaders incentivized? Are their interests truly aligned with yours?
Yes, and that's key. AMD's executive compensation is meticulously designed to align directly with shareholder interests. Big emphasis on long-term value.
You see that in the 2025 proxy statement. The 2024 packages were heavily weighted towards equity.
Very much so. Dr. Su, for example, received $27.9 million in stock awards out of her $30.996 million total compensation.
Wow. And Papermaster.
Similar story. $9.531 million in equity out of $11.225 million total. This structure powerfully incentivizes stock price growth.
Meaning their success is directly tied to your potential returns.
Creates a powerful shared interest. And the compensation is competitive. The CEO pay ratio, 216.1, is pretty standard for tech peers.
Compared to NVIDIA's Jensen Huang or Intel's former CEO, Pat Gelsinger.
It's right in the ballpark.
Yeah.
Competitive enough to attract and crucially retain the absolute best talent. They're playing at the top tier.
Beyond the individuals, what's the heart of AMD? Their mission, vision, the culture?
Their stated mission is pretty elegant. Build great products that accelerate next-generation computing experiences.
And the vision, positioning them as a leader in high-performance, adaptive computing.
Exactly. Powering data centers, gaming, and that burgeoning AI sector.
And the culture. It emphasizes innovation, inclusivity, execution. Is that just talk?
Doesn't seem like it.
Yeah.
Employees on Comparably rated them a B+ Auser, top 20% for similar firms. That suggests a healthy internal environment.
And initiatives like the AMD Women's Forum, hiring our heroes.
Highlight a commitment to diversity, which also helps attract a wider talent pool. Crucial in this industry. But this raises an important question for you, the investor. What are the risks with such a strong, perhaps centralized leadership team?
Like an over-reliance on Lisa Su.
That's certainly a key risk. Her impact has been transformative, no doubt, but her departure could disrupt momentum.
And succession planning isn't publicly detailed.
Not in depth, which introduces some uncertainty for the long term. Other challenges. Potential gaps in AI expertise compared to NVIDIA's established lead.
Though those seem to be shrinking.
They are shrinking, yes. And the continuous need for seamless integration of big acquisitions like Xilinx. These are complex risks.
So how does this leadership stack up against the big rivals, Intel and Nvidia? It's a fascinating comparison.
Well, compared to Intel, navigating complex leadership transitions post-Gelsinger, AMD's leadership under Su looks remarkably stable and strategically sharp.
And Nvidia. Jensen Huang has also had a long, transformative tenure.
Very similar impact in terms of vision and outcome. But here's the key difference for you. While AMD excels in CPU innovation and execution,
They still lag in AI software leadership compared to NVIDIA.
that's the critical distinction. The software ecosystem, the developer tools, the optimized libraries. NVIDIA has a formidable lead there. That's the real battleground.
Okay, we've looked at the architects. Let's move to the engine room itself. AMD's business model. How do they actually make money, and how easy is that for you to understand?
It's actually surprisingly straightforward, which is refreshing. They design and sell semiconductors, CPUs, GPUs, adaptive software.
For PCs, servers, gaming consoles, data centers, pretty much everything that computes.
Right. Think of them as the architects crafting the highly specialized recipes for the brains of these systems.
But they outsource the actual cooking, the manufacturing.
Exactly, to partners like TSMC. This fabless model lets them focus their huge R&D budget purely on design and innovation.
Even though technical terms like chiplets or FP4 or FP6 can sound intimidating,
They can. But analogies help. Chiplets are like modular Lego blocks. And those AI data types like FP4, FP6, it's about using just enough precision for AI tasks.
like using a thick marker instead of a fine pen when you don't need extreme detail.
Precisely. It makes the chips faster and more efficient for many AI jobs, especially inference.
So what are the specific products defining AMD's portfolio? It's quite a powerhouse lineup.
It really is. broad and impactful across high-growth areas.
First, there are Ryzen CPUs for consumer PCs. Strong market fit there.
Very strong. Over 20% market share, offering great performance for the price.
Then EPYC CPUs for servers. Critical for the cloud.
Absolutely critical. Rapidly gaining traction. Big cloud providers like AWS are electing them. Around 15% market share, already in a tough fight with Intel.
Radeon GPUs for gaming. Competitive, especially mid-range.
Fiercely competitive, maybe trailing Nvidia in overall dominance, but a very strong alternative for gamers and creators.
Now, the AI race, the instinct accelerators. This is where it gets really interesting.
This is the key battleground. The MI300X, MI325X, MI350, the upcoming MI400, all targeting data centers and AI workloads.
And the MI350 claims a huge jump in performance over the MI300X.
A staggering 4x compute improvement claimed, shows incredibly rapid generation-over-generation progress.
And finally, the Z-Link's adaptive SoCs, crucial for embedded systems, specialized AI.
Absolutely crucial. That acquisition opened up entirely new high-margin markets beyond traditional CPUs and GPUs. Think industrial, automotive, edge AI. Recent launches, like the MI325X in late 2024, clearly signal strong progress on their AI roadmap.
But it's important for you to note their AI products are still scaling up.
Exactly. They're impressive, but still working to achieve that widespread NVIDIA-level adoption and market penetration. It's a marathon in this segment. Building developer trust, a robust software ecosystem that takes time.
So with all these products, what makes AMD truly unique? How do they differentiate themselves in this fierce market?
A huge part of it is that unique leverage of their chiplet architecture. It's a game changer.
Because it allows for cost-effective scaling and customization, like Lego blocks instead of one giant piece.
Precisely. It's a stark contrast to NVIDIA's more monolithic designs. This approach lets them use different manufacturing processes for different parts, optimize cost or performance exactly where needed.
And get to market faster.
Potentially, yes. It aligns perfectly with their innovation focus, fuels the high-margin data center engine, and positions them to lead in adaptive computing via Xilinx.
And the EPYC's success against Intel's Xeon in servers is proof this strategy works.
Prime example, tangible proof that the chiplet strategy is paying off handsomely.
Every company has a history, peaks and valleys. What does AMD's track record tell us about their resilience?
Oh, they've navigated many cycles since 1969. Exhilarating success, daunting struggle. It's been a real roller coaster.
Key milestones, the Athlon CPU back in the 90s.
Put them on the map. Stole Intel's crown for a time. Then the transformative 2017 Zen launched the start of this modern resurgence. A stunning comeback.
And the strategic 2022 Z-Link's acquisition.
Propelled them into adaptive computing, significantly boosted their AI capabilities.
And under Dr. Su, revenue just exploded. $4 billion in 2014.
$25.8 billion in 2024. And data center revenue showing particularly impressive growth, up 57% year over year in Q1 2025. Clear upward trajectory.
Where does AMD actually operate, and crucially, who makes their chips?
Headquarters in Santa Clara, Silicon Valley. But they operate globally, key design centers in Austin, Shanghai, Bangalore.
They lease most facilities, and it's the fabless model, outsourcing manufacturing.
Almost all of it. To powerhouse partners like TSMC and Global Foundries. And this fabless model is absolutely critical for you, the investor, to grasp.
They controlled the design, the IP, but not the factories.
Exactly, which massively reduces capital expenditure, billions freed up, and gives flexibility to use the best manufacturing processes available.
But it also exposes them to supply chain risks.
It inherently does.
Yeah.
Compared to Intel's integrated model, AMD's approach is leaner, often more agile, but less direct control over production in a crisis.
How do these cutting-edge products get from the design board to the customers?
Through a robust, diversified distribution model. They sell through OEMs like Dell and HP.
Who put AMD chips in their systems.
Right. Also major distributors, retailers for consumers, and increasingly direct sales to large cloud providers building massive data centers.
And their online presence, partnerships with system integrators, helps scalability.
Definitely. Microsoft's Azure adopting the MI300X is a brilliant example of that strategy working, showing growing enterprise traction.
For investors, revenue predictability is key. How stable are AMD's earnings?
It's somewhat of a mixed bag. You have cyclical segments like PC and gaming sales.
Which can fluctuate with consumer demand, economic trends.
Right. But alongside that, you have more stable long-term data center and semi-custom contracts, think gaming consoles.
Those provide more consistent revenue streams.
Yes. In 2024, data center, 36% of revenue, and client, 22%, saw impressive growth. But gaming, 25%, actually declined.
Illustrates the cyclical nature.
Exactly. So moderate predictability overall. Some segments are more stable, others add volatility. Requires a nuanced view. Which brings us directly to external threats. What forces could genuinely rock AMD's boat? Things you need to be aware of.
Technological competition must be high on the list.
Absolutely. NVIDIA's dominant CUDA software ecosystem is a huge one. And Intel's massive foundry investments pose threats to AI and CPU markets respectively.
Regulatory hurdles, too, like the U.S. export controls to China.
Yes, highlighted in Q1 2025 earnings calls, directly impacts revenue and market access for high-performance chips. That's a dynamic risk for you to monitor closely.
And geopolitical risks, the reliance on TSMC in Taiwan.
That heavy reliance inherently poses risks amid ongoing U.S.-China tensions, a macro concern that simply can't be ignored, could disrupt the entire global chip supply.
Despite these formidable threats, how resilient is AMD? Can they weather these storms?
Their remarkable adaptability, look at the pivot to Zen, and their sharp focus on huge trends like AI and cloud computing make them inherently resilient.
What about anti-fragility? Can they actually benefit from shocks?
Moderately so. They can certainly capitalize if a competitor stumbles or market disruptions create opportunities, but they're not immune to broader supply chain shocks. No company is entirely immune.
Now, for the really interesting part for any investor, what prevents competitors from just replicating AMD's success? Where's their moat, their sustainable competitive advantage?
Well, they don't have a pure monopoly, but they operate in a CPU duopoly with Intel and a GPU oligopoly with Nvidia.
And they benefit from extremely high barriers to entry in semiconductors.
Massively. This is not a business you can just start in your garage. The capital needed, the IP, the talent, it's astronomical. Effectively closes the door to casual competition.
Does their sheer size give them an edge? Economies of scale?
Absolutely. That substantial R&D spent $6 billion in 2024, and their deep partnerships with TSMC provide significant economies of scale.
Still smaller R&D than NVIDIA's $8 billion, but still huge.
Still a massive commitment that smaller players simply cannot match, necessary to compete at the cutting edge.
This raises the question of network effects. How does that play in, especially in AI?
In AI, NVIDIA's CUDA platform creates an incredibly powerful network effect. The more people use it, the more valuable it becomes, self-reinforcing.
And AMD's ROCm software ecosystem is less mature, limiting its network effects currently.
Yes, while rapidly improving, it's still less mature. That's a key persistent challenge for your understanding of their AI strategy. Closing that software gap is paramount.
How does AMD position itself against the giants? Price performance.
Often, yes. A clever strategy of counterpositioning, offering an alternative value proposition, often better price performance.
Like Ryzen versus Intel Core. More bang for your buck.
Exactly. Appealed to budget-conscious buyers, offered compelling multi-core performance, reshaped expectations, helps them capture market share.
What about switching costs? How hard is it for customers to move?
High switching costs exist, definitely in AI. Moving from CEA to ROCm needs substantial code porting, developer effort. It's costly and time-consuming.
That's the digital superglue keeping customers sticky.
Pretty much. And in the CPU market, enterprises also face moderate switching costs, software reoptimization, retraining, creates a degree of lock-in.
And their brand, does it resonate strongly?
Very strong among PC enthusiasts and gamers. A loyal following built on performance and value.
And that's translating to the enterprise space with EPYC.
It is. But in the broader AI landscape, their brand is still building recognition compared to NVIDIA's pervasive presence. NVIDIA is almost synonymous with AI acceleration right now.
So the challenge is extending that trusted brand into bleeding-edge AI.
Exactly. Convincing developers and enterprises they're not just an alternative, but a leading force.
What about cornered resources, unique assets they possess?
A significant advantage is accessing TSMC's leading-edge manufacturing nodes. Critical for advanced chips, only a handful of companies get that preferential access.
Talent is another resource, though competition is fierce.
Absolutely. And beyond patents, they hold crucial proprietary design methodologies for Zen and CDNA, unique ways they optimize chiplet integration, inter-chip communication.
Hard for competitors to replicate without infringing IP or years of R&D.
Very hard. That combination of manufacturing access and unique design IP forms a robust cornered resource.
Does their unique chiplet design approach contribute to the moat?
Absolutely. Distinct cost and performance advantages. That modular approach offers flexibility, customization, cost savings that monolithic designs struggle with, a core differentiator.
Is timing everything in tech? Has AMD capitalized on market windows?
Timing has been remarkably fortunate for them at key points. and they've capitalized brilliantly.
Like the 2017 Zen launch catching Intel during manufacturing delays?
Perfect example. Created a window for AMD to surge back. Similarly, the strategic 2025 MI350 release aligns perfectly with the exploding AI accelerator demand. Excellent market timing.
Which leads to speed of execution. How quickly can they bring innovations to market?
Under Dr. Su, they've dramatically accelerated product launch cycles.
The MI350 sampling ahead of schedule is a testament to
A
that.
powerful testament. Shows improved speed and operational discipline. Huge advantage in a fast-moving market.
So what's the verdict on the sustainability of their moat? How long can they keep this up?
It's sustainable if they consistently maintain innovation and solidify that critical TSMC partnership.
But persistent software gaps, especially in AI with ROCm, could erode hardware advantages.
Gradually but surely, yes. That's a risk you need to watch. Also, new disruptive entrants or NVIDIA's entrenched software lock-in pose ongoing threats. It's a constant battle. The moat needs continuous reinforcement.
All right, we've looked at the foundation, the defenses. Now, where is AMD heading? What's their growth strategy? And just how big is the pie they're chasing?
They're aiming to expand through a multi-pronged, aggressive approach.
First, market penetration. More EPYC and Instinct adoption in existing markets.
Right. Leveraging their performance per dollar story in data centers and enterprise.
Second, market development. Venturing into new AI and embedded markets.
Yes, largely aided by that transformative Xilinx acquisition. Opens new revenue streams, industrial automation, automotive edge AI.
And third, product development. Continuously launching cutting-edge chips.
Like the MI350, the anticipated MI400 RDNA 4 GPUs, staying at the absolute forefront of innovation.
And the size of this opportunity, it sounds massive.
It's simply massive. The data center market projected to hit $500 billion by 2030.
With AI accelerators alone reaching $200 billion within that.
Exactly. This isn't just growth. It's a Cambrian explosion of demand. AMD's total addressable market, their TAM, is immense.
CPU is a $50 billion market. GPU is $30 billion. Adaptive SACs, $20 billion.
Right. And acquisitions like ZT Systems and Xilinx actively enhance their ecosystem, broadening their reach within these huge markets. They're positioning for a very large piece of an incredibly large growing pie. Which raises the question for you. What applications will drive this growth?
Cloud computing, gaming, automotive, scientific research. It's broad.
Incredibly broad, serving critical high-growth applications. That diversity offers scalability and reduces reliance on any single sector, makes growth more robust.
We touched on supply chain. How diverse is it? How does that impact growth?
That heavy reliance on TSMC is the known risk, while TSMC is expanding globally.
The geopolitical tensions around Taiwan remain a factor for you to consider.
Unfortunately, yes. It's a significant factor for assessing long-term supply stability, a complex, overarching risk affecting the whole industry.
And their customer base, concentrated or spread out?
Impressively diverse. Major players like Microsoft, Sony Think, PlayStation chips, various automotive firms.
That diversity helps reduce reliance on any single sector, a buffer against downturns.
Exactly. A strategic advantage. They aren't putting all their eggs in one basket.
Yeah.
Which brings us to longevity. For you as an investor, how long will AMD's products stay relevant?
The report suggested a high probability, around 90%.
Yes, highly relevant for the foreseeable future. Fundamentally driven by those enduring trends of AI and pervasive computing. These aren't fads.
Foundational shifts, but severe economic downturns could still impact demand.
Prudent to remember that. Even cutting-edge tech needs a healthy economy to thrive.
So the absolute key drivers fueling AMD's growth, what are the core engines?
Boils down to a few critical things. Continued data center adoption of EPYC and Instinct.
The unequivocal success of their AI accelerators, MI300, MI400, capturing meaningful market share.
And further CPU market share gains, especially enterprise, chipping away at Intel. Those are the core tenets, which raises the counter question. Main risks to that growth. What should you watch out for?
NVIDIA's continued dominance in AI accelerators has to be number one.
Especially given their software moat. Also, potential supply chain disruptions affecting chip production, immediate severe impacts.
And market saturation in the cyclical gaming segment.
Right. Historically, experiences peaks and troughs, could see declines impacting overall revenue.
All right, let's unpack this. Time for the hard numbers. As an individual investor, you want to know, how is AMD actually performing financially?
Let's look at the key metrics for 2024. Revenue growth. A robust $25.785 billion.
Up 13.69% from 2023. Solid growth in a competitive space.
Very solid. Profit margins. Gross margins 49% GAAP, an impressive 53% non-GAAP.
Operating margins 7.4% GAAP, 23.6% non-GAAP. Net margins 6.2% non-GAAP, 20.9% non-GAAP. Those non-GAAP figures show healthy operational efficiency.
Yes, a clearer picture before certain accounting adjustments. Shows ability to turn sales into profit.
The Rule of 40, combining revenue growth and free cash flow margin.
Stood at 23.01%. That's 13.69% revenue growth plus 9.32% FCF margin. Healthy, but below that common Rule of 40 benchmark for hypergrowth tech.
Suggests maybe a more mature growth phase, balancing growth and profitability.
Exactly. Might appeal if you're seeking stability over pure speculative growth. Indicates a more established player.
Return on equity, ROE, around 2.89% in Q4 2024 seems low.
Relatively low, yes, but primarily due to their very high equity base, $57.568 billion from past acquisitions and raises. Not necessarily poor performance.
Cash and debt position looks strong.
Very healthy. $5.7 billion cash, manageable $1.721 billion long-term debt. Very low debt-to-equity ratio, 0.03. Current ratio around 1.88. Strong liquidity, lots of flexibility.
Book value growth. Equity grew to $57.568 billion. Book value per share, $35.61.
Up from $55.892 billion in 2023. Growing asset base, increasing shareholder equity.
And perhaps most impressively, free cash flow growth.
Fantastic. $2.4005 billion. An incredible 114.54% increase from 2023. Critical for you shows exceptional ability to generate cash after expenses.
Which can be reinvested in R&D, acquisitions, maybe returned to shareholders.
Precisely. And finally, R&D spending. $6 billion, about 23% of revenue. High percentage, but typical for an innovation-driven semiconductor company. Now, connecting this to the bigger picture, how do these numbers stack up against Intel and Nvidia?
The direct competitors, let's see the 2024 data.
Revenue, AMD at $25.8 billion, Intel $53.1 billion, Nvidia leading with a staggering $60.9 billion.
So AMD's significant, but not the biggest in sheer size.
Right. Gross margin. Kimi's 49% is far superior to Intel's 32.7%. Shows much better efficiency, pricing power than Intel.
But trails NVIDIA's remarkable 72.7%.
Significantly trails. Highlights NVIDIA's unparalleled profitability, likely due to software dominance and commanding position in high-end AI accelerators. Allows them to charge a premium.
And return on equity, ROE.
AMD's 2.89% looks good compared to Intel's negative ROE, tells the story of Intel's recent struggles, but dwarfed by NVIDIA's approximately 50%.
Wow. NVIDIA's capital efficiency is incredible.
It really is. So the comparison tells you, AMD clearly outperforms Intel on growth and margins, showing strong execution, but still has significant ground to cover to reach NVIDIA's extraordinary profitability. NVIDIA's operating at a different financial level right now.
What are the overarching financial trends we should watch?
Revenue and margins have shown steady, impressive growth since 2017, driven by data center and client segments. The Zen effect reflects that successful turnaround.
But the gaming segment decline in 2024 is a reminder.
A good reminder for you of the cyclical nature of parts of their business. AI is booming, but older segments still matter and fluctuate. Need a balanced perspective.
Okay, here's where it gets really interesting. For you, the individual investor, the ultimate question, what's AMD truly worth? Is the current stock price a bargain or inflated by AI hype?
Valuation matters. Fundamentally helps you assess if it's overpriced or undervalued. Guides your investment decisions.
Buying below intrinsic value gives that margin of safety, reduces risk if projections don't pan out.
Exactly. Crucial. Now, for methods, a discounted cash flow DCF model is ideal for deep valuation, but complex. Many assumptions.
So for simplicity, we often rely on relative metrics. PE, PS ratios.
Right. For AMD, forward price to earnings, PE, and EBITDA are particularly relevant. Give a snapshot relative to expected future earnings or overall company value, and thankfully, no Bitcoin treasury complicating things. More traditional tax valuation. Which raises the key question. What are the different narratives around AMD's valuation right now? You'll hear strong opinions.
Let's start with the bear thesis. What are the skeptics saying?
They'll point to AMD's current high valuation, forward PE around 29. They argue that Kiwi's assumes extremely aggressive, maybe unrealistic AI growth.
Risky if NVIDIA maintains its dominance or if supply chains get disrupted.
Exactly. Some posts on X highlight recent underperformance, maybe a made again 52% year-over-year figure for some buyers, suggesting disappointment, hype outpacing reality.
Okay, now the bull thesis. What are the optimists arguing?
They're convinced AMD's massive AI potential, Plus, continued CPU market share gains from Intel makes the current $116 stock price offer significant undervalued potential.
Especially if MI350 and MI400 succeed in capturing a meaningful slice of the AI market.
Precisely. Analysts see potential upside to $140, implying substantial room for growth as AI revenue ramps.
So what's the probable thesis for you? Where does the balance lie?
Likely a cautiously bullish one. Given the undeniable exponential AI market growth, a rising tide lifting many ships, and AMD's impressive execution.
But tempered by those persistent challenges in the AI software ecosystem, RCM versus CUD.
That's the tempering factor. It remains the primary hurdle against NVIDIA's formidable lead. Compelling growth story, but with a significant if attached to software.
So at that $116 price point, is there a discount for your portfolio, a genuine opportunity?
Let's assess. At $116 with estimated 2025 EPS of $4, the forward PE is 29.
Not historically cheap, but maybe reasonable for a high-growth tech company in this space, especially with the AI boom.
Generally considered reasonable, yes. Now, the interesting part for you, compare it to NVIDIA's much higher forward PE, around 50.
So AMD could potentially be undervalued if its AI gains materialize as expected, if they chip away at NVIDIA's share.
Potentially, yes. This comparison presents a unique opportunity, a calculated risk-reward. Might offer a more attractive entry point into AI than its more celebrated peer. A chance to buy a contender, not just the champion.
Beyond numbers and valuation, what's making headlines for AMD right now? Current and upcoming events you should track.
First, the MI350 sampling. Big news began Q1 2025, ahead of schedule.
Signals strong progress on the AI roadmap, shows execution speed.
Exactly. Vital in this fast-moving space. Next, Q2 2025 earnings, expected late July. Crucial release for you to monitor.
Pay attention to commentary on AI accelerator ramp-up, data center revenue, customer wins.
Definitely. And finally, Computex 2025. AMD's press conference there often reveals exciting details.
Keep an eye out for potential MI400 announcements, the next gen.
Absolutely. MI400 could truly shake things up, reveal their longer-term AI strategy. Which leads to the buzz on the street. Beyond official news, what's the vibe on platforms like X?
Sentiment sounds mixed, reflecting volatility and strong opinions.
Very mixed. You have optimists passionately seeing AMD as a bargain, citing AI potential, growth trajectory, historical turnaround.
Arguing past success predicts future triumphs.
Right. Conversely, pessimists vocally point to recent stock underperformance, NVIDIA's seemingly insurmountable lead, suggesting an uphill battle.
Risk of being perpetual second place.
That's their argument. The dominant concerns swirling right now for your consideration are precisely AMD's AI market share battle against NVIDIA and the stock's inherent volatility. It's a highly debated stock.
Okay, let's unpack this. We've arrived at a central question that kicked off our deep dive, the one you're undoubtedly most curious about. Can AMD truly compete in the AI arena? Challenge NVIDIA's dominance with MI350, MI400 tech? Or are they destined to be second fiddle?
Well, from a purely technical standpoint, AMD's MI350 and the upcoming MI400 are absolutely unequivocally competitive hardware.
The MI350 boasts impressive specs. 288 GB of HBM3E memory.
Which is critical for large AI models. HBM high bandwidth memory is like stacking memory right on the processor, vastly higher bandwidth than traditional memory. Crucial for data-hungry AI models.
And the MI400 targets even more, 432 GB of HBM4.
Pushing boundaries further. And benchmarks in select workloads even claim significant advantages over NVIDIA 1.3x faster inference, 1.13x faster training.
So if the hardware is competitive, what's the catch?
The catch, the significant hurdle, is NVIDIA's deeply entrenched CUD ecosystem. It's not just software, it's a powerful, sticky software lock-in.
Makes it difficult and costly for developers to switch once they've committed.
Incredibly difficult. Thousands of AI models, applications are optimized for CDA, creates massive inertia. Developers often stick with what they know. However, AMD is absolutely not standing still. They've made substantial continuous improvements with their own ROCm 7.0 software stack.
Showing commitment to building out their ecosystem, offering a viable alternative.
Clearly. And they're actively participating in the UA-Link Consortium, an important industry alliance developing an open standard for AI interconnects.
Directly challenging NVIDIA's proprietary NVLink, aiming to democratize communication between AI accelerators.
Exactly. Foster a more open, competitive AI hardware landscape. Potentially break NVIDIA's stronghold. These efforts are crucial to closing that software gap.
So the ultimate verdict, what should you take away?
Unlikely they'll win outright, dethrone NVIDIA completely.
Highly unlikely in the near term. But the analysis strongly suggests AMD can absolutely be a powerful dark horse.
Poised to capture significant market share, especially through aggressive pricing, partnerships.
Yes. Offering compelling performance per dollar, forging partnerships with cloud providers, enterprises eager for alternatives, they won't dominate, but they'll be a formidable competitor reshaping market dynamics.
So what does this all mean for your investment strategy? Key insights you should walk away with. Let's break it down. Truths. AMD's success in CPUs, that critical TSMC partnership, provide a strong foundation. And the AI market growth is so vast, it supports multiple players.
Risks. Be aware of that persistent software lag versus Nvidia, their Achilles heel. Nvidia's continued dominance, geopolitical reliance on TSMC, constant factors.
Uncertainties. The pace of AI adoption, potential regulatory changes, unforeseen tech shifts, all variables for you to monitor. The future is never perfectly clear.
But here's the edge, the potential opportunity.
The report suggests investing around the $116 price point could genuinely yield significant upside if AMD manages to gain even a modest 5–10% AI market share by 2027.
Not a guarantee, but the calculated risk-reward if you believe in their execution.
That's the potential play for you, yes. Believing they can execute on the AI roadmap and capitalize on the massive opportunity.
So what does this all mean? Our deep dive into AMD reveals a company with formidable leadership, a resilient business model built on innovation like chiplets, and a clear, aggressive path into the explosive AI market.
While the challenge from NVIDIA is immense, AMD is far more than just an underdog. They're a legitimate contender.
Making strategic, calculated moves in a multi-trillion-dollar landscape. The question for you to ponder now is, how much of that future AI pie can AMD truly carve out for itself?
And what does that mean for the next thrilling chapter in their incredible turnaround story?
Thank you for diving deep with us today.
Love this? Drop a like, subscribe, and ring the bell so you never miss a podcast.